There were two huge earning reports yesterday. One in a company that I begrudgingly use, not the biggest Amazon fan, but hey, sometimes you need a mouth guard, and it's the cheapest one on Amazon because your dentist told you you're grinding in your sleep. Not like you're working hard, but grinding. The other company is Apple. So you could say that I'm heavily invested in these earnings reports. So let's go take a look. But first, smash that follow. Let's start with Amazon first. It says Amazon shares pop on earnings beat and cloud growth. Amazon shares surged in extended trading after the company reported better than expected earnings and revenue. They were expected to do $1.14 in earnings per share, but they ended up doing $1.43. Revenue was expected to be $157.2 billion, but they ended up coming in at $158.88 billion. Amazon Web Services, well, that one fell a little bit flat. They were expecting $27.5 billion and they ended up doing $27.4. They were also expected to do $14.3 billion in advertising, and they did $14.3 billion. Amazon Web Service revenue grew 19%. But Amazon Web Services is still growing slower than some of their challengers, including Microsoft that came in at 33% and Google's that increased at 35%. Look at this one. Their capital expenditure surged 81% year over year. It went from $12.48 billion all the way up to $22.62 billion. This is largely due to their investment in data centers and equipment like NVIDIA's GPUs to power their artificial intelligence products. They're also expected to announce a new version of Alexa Voice with its generative AI. The CEO, Andy Jassy, said they plan to spend around $75 billion in 2024, and they'll spend even more in 2025, driven by AI. And this ramped up spending on AI reminds me of another company that reported earnings earlier this week. Meta, that's Facebook, warns of a jump in AI spending. You can see this is Amazon stock kind of trading in a little bit of a range here, and then earnings come out and boom, it shoots up to over $200. Now, right now, pre-market, you can see it's $927. Right before the market's open, it's hovering around $200. Let's see how Apple did. Apple sales rise 6%. The company sees early iPhone 16 demand. But net income slumped after the company paid a one-time charge as part of a tax decision in Europe. Hear what I'm hearing here? A one-time charge, net income slumped, the stock is actually down, and it might be largely due to this one-time slump. In my eyes, this is a non-issue. So if the stock is getting hit over a one-time issue, it's a buying opportunity, at least for me. But let's see how earnings did first. They were estimated to do $1.60, but they came in at $1.64. Revenue was estimated to be $94.58 billion, but they came in at $94.93 billion. iPhone revenue was estimated to be $45.47 billion, but they came in at $46.22 billion. Mac revenue did fall a little short. They were estimated to do $7.82 billion, and they came in at $7.44. iPad revenue also fell a little bit short. They were estimated to do $7.09, and they came in at $6.95 billion. Other product revenue was estimated to come in at $9.21 billion, and they came in at $9.04, so falling short there as well. Services revenue was estimated to do $25.28 billion, and they came in at $24.97 billion. And gross margins were estimated to come in at 46%, and they came in at 46.2%. Sales of the iPhone 15 were stronger than 14 in the year-ago quarter, and 16 was stronger than 15. And Tim Cook, or is he Tim Apple? I can't remember. Either way, Tim Cook said the company was looking forward to Apple Intelligence. And before earnings, Apple was trading in the 230s and is now 221. Apple Services unit is a $100 billion juggernaut. Make sure you smash that follow. Thanks for watching. See you later.